Arvind Sanger is good at it. I mean, he's certainly good at judging what is happening in America, stock markets, but is he good at judging what the US president will do next now? No one knows. I at least don't know. That's why I'm asking you. Do you know?
None of us know, but the market has correctly been rising because the bet is that at the end of the day, Trump's tariff threats are a negotiating tool. They're not a tool to destroy the US economy because eventually tariffs hurt everybody. So I think the market is making the bet that deregulation is coming, taxes are going to stay low. The one area where I worry is that there's a hope that maybe there'll be a lot of cost savings from Doge and Elon Musk. And I'm not sure how much they'll be able to extract, but there's some hope that there'll be something there. And then the other hope, which so far, hasn't proved to be wrong, is that Trump's tariff threats are an opening gambit in negotiations, not an end of themselves. So in that sense, the market keeps going high. And the other interesting thing, very interesting, is that this year, the rally is not driven by the Mag 7, as they're called. It's much more broad-based. So that is encouraging in the standpoint that suggests that this is a broader economic optimism rather than just buying those 7 names and hoping everything else would not matter.
For stock market participants, how should they approach this entire reset which has been pressed? Should they wait for the actual announcement, but more than announcement, the implementation before you jump to any kind of a conclusion?
I think the investors are making the bet that these deadlines. Remember, he said even for Canada and Mexico, it was just a 30-day stay on the 25% tariffs on Canada and Mexico. And you can see that the market hasn't fully given value back to those companies. We're waiting to see what happens, in 10 days or so to see whether there's another additional extension or there's a deal that causes it to go away. So I think all of these are uncertainties. And I have to say, I'm frankly somewhat surprised that the market is as sanguine as it is. But I think the reason the market's so sanguine is so far the market's bet has been correct, that Trump talks about tariffs, but gets concessions and doesn't really implement anything meaningful. I mean, there's been a little bit of tariffs, right? The steel and aluminum tariffs have come in. But again, if you look at his prior term, those steel and aluminum tariffs were negotiated. So everybody got an exception. If I agree to do something in Japan, I get exempted. If I agree to do something in Europe, I get exempted. Canada, some similar things. So I think that, Prime Minister Modi went and met President Trump. And, if there's enough that India does, then does India get reprieved? So all of these things are negotiations, but the risk, and I will point out the risk is if the other side doesn't play ball the way that President Trump wants to, can things go off track? That's the risk. But there's another very interesting thing, which is the whole peace dividend. He's talking about denuclearization with Russia and China. He's obviously moving fast for ending the Russia-Ukraine war. He's already helped bring about the end of the, at least the current ceasefire because of his efforts in Israel-Gaza. So, there's a lot going on. And the market is saying, you know what, the economy is doing fine and businesses are going to get more optimistic and things will go fine.
Arvind, I think more confusing is the Fed minutes right now, because it seems as uncertain. Looking at their commentary, they're saying that, yes, there are potential for geopolitics to now create some supply disruptions. But they're saying inflation progress has stalled since mid-2024, and they do see upside risks to inflation. They're also talking about how they can keep policy restrictive if the economy is strong. You don't know what really to make of the Jan minutes.
I think that is clear, that inflation has stopped being, on a downward trajectory. It is clear that inflation has kind of plateaued at a level or bottomed at a level which is higher than where the Fed wanted it to bottom. So therefore, I think it puts Fed on hold until we get clearer signs. And here's the problem. If the economy does too well, that is inflationary. if the deficit doesn't come down meaningfully, that is inflationary. So I think the Fed is, and obviously the Fed is also not wanting to make a bet on the tariff front. So there are enough things that are uncertain that I don't think the minutes today were a surprise. I don't think the market had any major reaction to it because the Fed is doing what it should, which is being data dependent and waiting for how the data unfolds to see if inflation is clearly headed towards that 2%. It seems like it's stalled. So therefore, the Fed minutes were not surprising.
Right. Okay, Arvind, great to have you on the show. Thanks as always for your time.
Thank you.
If you like this video, then like, share and subscribe to ET Now.